How's it going, everybody, and welcome back to the podcast. Today we're going to be talking all about Eli Lilly in particular, and also some other stocks that are in a completely beat-up sector of the economy right now. I mean, it's been a pretty shaky time for healthcare stocks, to say the very least. We have Eli Lilly. Let's take a look at how much Eli Lilly is down right now. And they have gotten absolutely killed over the past month or so. So Eli Lilly is down 4.93% just today alone as of recording this video. Over the past month, it is down 18.30%. I mean, that's just incredible. And over the past 6 months, it's down over 5.19%. And that's 6 months of holding this particular stock. And by the way, it might actually get a lot worse, I should say, for potentially Eli Lilly, as well as Biogen and other health stocks as well, like Moderna, Pfizer. I mean, Pfizer has absolutely gone down the drain over the past just month alone. So the healthcare Select Sector SPDR Fund, which owns shares of major U.S. health insurers, medical device makers, etc., drug makers. Let's just see how much they are down. So they're the SPDR Fund. I'm going to take a look at this because I want to see it for myself. Oh boy. Yeah, I don't know why it's not even coming up. Okay, there it is. So gross expense ratio is 0.945%. $593.39 for the SPDR ETF trust. I mean, for some reason, it's not really giving me like how much it's down, but it's not really giving me any charts. That's what I want to see. I want to see charts. Anyway, the healthcare sector SPDR Fund, which owns shares of U.S. health insurers. Okay, investors have been selling healthcare stocks, buying up more economically sensitive ones instead, as the Federal Reserve has cut interest rates and market account for the positive economic consequences from Republicans winning the White House and both chambers of Congress. Now, healthcare stocks are cheap, and many names could rise significantly in the long term. On average, stocks in the fund trade at about 18 times analysts' expected aggregate earnings for the coming 12 months versus the S&P 500 22.4 times. In the past decade, they have often traded at just 1 or 2 points below the index. When they're in favor with investors, they tend to trade in line with the broader market. Broadly speaking, healthcare multiples are unlikely to fall much further, so as their earnings and dividends payments grow, stock prices will move higher too. Several names stand out, of course, as Barron's, including Eli Lilly, which stock is down 17% from a record high in late August. I mean, get that, 17%, that is insane. Lilly stock traders at 38 earnings, down from 58 times earlier this year, and a much slimmer premium versus the S&P 500s. That premium exists because the future looks promising. Analysts tracked by FactSet expected Lilly's earnings per share to grow by 32% annually over the next 4 years, about $40 by 2028. Analysts are forecasting 17% sales growth to $88.5 billion by 2028, led by sales Eli Lilly's weight loss drug Zepbound, which could eventually compromise a mass chunk of total spending on weight loss. And yeah, this is one of the big reasons why Eli Lilly is such an attractive one for investors. Obviously, in the short term, it might really be bad. I mean, as you've seen, I mean, it has been bad over the past 6 months in a short-term trade or a short-term hold. I mean, because the drugs are becoming so well branded and effective, management won't have to increase the spending on them too much. So when was this here? November 14th, this article was written. Okay. I'm curious. So Biogen. Okay, so Biogen, meanwhile, may have fallen out of favor with investors, but it's potentially undervalued. The stock is down more than 50% to 163 from a multi-year high hit in the middle of 2021. Biogen is a risky one because of just how much it's down. Biogen, I mean, speaking of shares that are down, Biogen is just getting crushed. I mean, really crushed. Like over the past year, it's down negative 30.33%. The revenue, though, is 14.38 billion back in 2019, and over the past 5 years, then it's down negative 43.32%. Max, though, it's up 5,533.45%, and that's just obviously since 1991. But I mean, that's 2012. If you bought this one share in Biogen in 2012, it was $138.08, and now it's freaking valued at $159.99. I mean, as an investor, I wouldn't be too happy with that, obviously. But it really just depends on what you want to do. Obviously, let's just take a look here. So this is interesting. So Buffett actually did own Biogen at one point. He started to build up a position in Biogen in Q4 2019. Since then, they sold 648,000 shares. The investors completely sold out their stake between Q1 2020 and Q2 2021. Yeah, good move. But yeah, I mean, in the short term, Eli Lilly is not looking great, obviously. And Biogen is just looking even worse. But again, as they said, Biogen could be undervalued, just depending on what it is, what you're looking at. But yeah, it's going to be interesting to see what happens here. So if you like this, remember to leave a like, subscribe, and hit the notification bell for more. Thank you so much for watching, everybody, and hopefully I will see you in the next video.